Hey, hello everyone. Hello everyone. Good evening. How are you all? Good evening, everyone. My name is Afreen and I welcome you all to today's session. So today is actually IFS Union Budget topic. Okay. So in this class, I'm going to discuss and I'm going to give you the review of all the chapter with the related questions that is related with the discussion of the class. Please like and share the video to the maximum you can. And if you haven't subscribed this channel yet, guys, please subscribe the channel and press the bell notification icon. So let's start this class and let's start the topic. First of all, if we talk about union budget, okay, let me tell you what is union budget, the basic definition of the union budget. So union budget is what? Union budget is the expected income and expected expenditure statement of the government for the coming financial year. So in every year, government does what? Government for the coming financial year means for 1st April to 31st March, what sources they have to generate the income, and the income they have or the generated income they are spending in which sector and in which percentage. The statement of expected expenditure and expected income of the current financial or the coming financial year is known as the budget. Now if we talk about the budget, union budget, so if we talk about the union budget, the word budget is actually replaced by the word annual financial statement. It is from the article 112. So article 112 actually replaced this word budget with the word annual financial statement. Okay, so when we are talking about the budget, first of all, the budget, the annual budget of the country is the union budget. It is presented by union finance minister in the parliament. Okay, in early, if we talk about previously, it was presented at the last working day of February, but from now onwards and from 2016 onwards, it is now presented on the 1st of February every year. Now, according to Article 112, if we talk about the Article 112, Article 112 has actually replaced this word budget into the word annual financial statement. Okay, and what is budget? So budget is simply the expected income and the expected expenditure of the government in the coming financial year is known as the word budget. Okay, now let's talk about the budget. Now if we talk about the budget word, actually complete budget, if we talk about the budget, the complete budget is divided into two categories, that is known as the income. Officially, it is known as the receipts and expenditure, which is known as the expenses of the government. So the complete budget is actually classified into two parts. First is known as the income, that is also known as receipt, and another one is known as expenditure. So now, what is this income and what is this expenditure? As you all know that government has different sources of income as well as they have different sources of expenditure as well. If we talk about the income portion, the nature of the income is actually divided into two categories. The income actually divided into two categories. First is known as the revenue income and another one is known as the capital income. Now, let us discuss what is revenue income and what is capital income. So, first of all, if we talk about the capital income means any income of the government which either increases the financial liabilities of the government or it reduces the asset of the government. Means only one can satisfy the situation that it is termed as the capital budget or capital income. Capital income means any income if that income increases the financial liability. Increases the financial liability means what? Increases the financial liability means, for example, the income which is coming, the income which is actually generated by the government actually is not the income of the government. It actually increases the burden of the government, means the government has to return it back, for example loan. Okay, or it actually reduces the asset, for example either loan that increases the financial liability. Or you can say if the government has sell any asset, a government has sold any asset, and by selling off the asset, the government in return have the income, that is known as the capital income. Means either it can increases the financial liability or it can reduces the asset of the government. And if we took the example like loan is a capital income, why? Because it increases the financial liabilities of the government. Like selling of government share, selling of government share, if the government has sold some shares to private sector and generated this income, now it actually reduces asset of the government, and that's why it is termed as the capital income. Okay, so this type of income is known as capital income. Now, what is revenue income? Revenue income, other than this, all are revenue income. If I talk about the definition, revenue income is those income which neither increases the financial liability. Revenue income neither increases the financial liability nor it decreases the asset. See, first of all, just notice and focus about one thing. I have said if the income increases the financial liability of the government, then it is capital income. If it doesn't increase the financial liability of the government, then it is known as the revenue income. I haven't talked about the decreasing in the financial liability. In the same way, if I said that if the asset is reduced, then it is capital income. If asset is not reduced, that it is a revenue income. It is not said that the revenue income increases the finance assets. So, first of all, just remember this, revenue and capital income are not opposite of each other, because income has its opposite in the expenditure. So, if we talk about the exact opposite of this, it lies in the expenditure. A very simple thing is capital income, it increases the financial liability. Revenue income, it doesn't increases the financial liability of the government. Same, if we talk about the asset, if asset is decreased, then it is capital is asset, and if asset is not decreased, then it is termed as the revenue income. Clear? So, if we talk about the revenue income, the example of revenue income can be taken as this, like taxes. If we talk about any type of taxes, taxes neither increases the financial burden nor it decreases any asset. That's why it is a revenue income. For example, fees, exam fees. It neither increases financial liability nor it decreases the asset. Like commissions, like royalty, like the government is earning from railway, like the government is earning from buses or transport. So these all are known as the revenue income. Why? Because it neither increases the financial liability nor it decreases the asset. Now, if we talk about the revenue income is divided into two categories again. First is known as tax and another one is known as non-tax. Okay. Now, taxes, all type of taxes come in the taxes revenue income, whether direct taxes or indirect taxes. But if we talk about the non-tax, so other than taxes, whatever income left in the revenue comes under non-tax revenue income. Okay, like railway fees, fine, commission, royalty, anything that's come under non-tax. So I have just classified it into two parts, tax and non-tax. Tax means all type of taxes. Whatever left in the revenue income is listed in the non-tax revenue income. Okay. Now, if we talk about the taxation, taxation is again divided into two categories. There are two type of taxes which we have learned. First is known as the direct taxes and another one is known as the indirect taxes. There is a direct taxes and there is an indirect taxes. Now, what is the difference between direct taxes and what is the difference between indirect taxes? Okay. So, direct taxes and indirect taxes. First of all, if we talk about the direct taxes, the definition of the direct taxes is as when the impact and incidence lies on the same person, then it is known as the direct taxation. When the impact and incident of the tax lies on the same person. Impact means the one person on whom the liability, the government has given the liability to submit the tax. That is known as impact. Incidence is the one person who actually pays taxes from his pocket. So impact means the one person on which the liabilities has been imposed by the government to submit the tax, and incidence is the one person who actually pays taxes from his pocket. When these are same, means impact and incidence lies on the same person, then it is known as direct taxes. When impact and incidence lies on two different person, on a different individual, then it is known as indirect taxes. Let me give you one example, like income tax. Okay, I am teaching you, I am earning income, and from this income government has said to submit income tax. So I have given the burden to submit income tax to the government. Now if I talk about the income tax, I am the only person who actually deduct the income tax from my pocket and submit it to the government. So impact is also mine, incidence is also mine. So impact and incidence, they both lies at the same person, that is known as direct taxes. And indirect taxes like GST. When we are talking about the GST, the government said whoever is giving the service has to submit GST to the government. Whoever is giving the service has to submit GST to the government. Means the impact is on the service provider. But when we talk about the GST, the service provider does what? It actually transfers the burden of the taxes to its customer. And the customer is the one who is actually paying GST from his or her pocket. So incidence is the customer and impact is the service provider. So impact and incidence, they both are two different person, and that's why GST is an indirect taxes. So direct taxes, these are transferable taxes. Indirect taxes, actually these are non-transferable taxes. There is a direct taxes and there is an indirect taxes. Direct taxes are transferable, indirect taxes are non-transferable. For the submission or for the collection of the direct tax, there is a board which is known as Central Board of Direct Taxes. And for the collection of the indirect taxes, there is a board which is known as Central Board of Indirect Taxes and Custom. This is responsible for collecting indirect taxes. Clear? Now, let's talk about the expenditure. Again, the government expenditure is divided into two categories. First is known as the revenue expenditure, and another one is known as the capital expenditure. So, there is a revenue expenditure and there is a capital expenditure. Same, like income is divided into two categories. There is a revenue and the capital income, and the same way the expenditure is divided into two categories. One is known as the revenue and another one is known as the capital expenditure. Now, what is capital expenditure? Capital expenditure is the expenditure in which either the expenditure actually reduces financial liabilities of the government or increases the asset of the government. Means the exact opposite of capital income is capital expenditure. Means if any expenditure reduces the financial liabilities of the government or it increases of the government, then it is known as the capital expenditure. But when we are talking about the revenue expenditure, it neither decreases any financial liability nor increases any asset. Okay. The next difference between these two is capital expenditure are development in nature. Actually, it directly helps in the development of the economy, whereas non-revenue expenditures are considered as non-development in nature. Revenue expenditure are often termed as recurring nature, means the expenditure which is repetitive, whereas capital expenditure is non-recurring, means they are non-repetitive. Revenue expenditure is of short term, whereas capital expenditure is of long term expenditure. Okay, so these are the difference between expenditure, revenue and capital expenditure. Now, let us take the example. If we talk about the pension, now pension is a revenue and capital expenditure. How can you judge? First of all, it is recurring in nature, pension. Second, short term means it is provided monthly. Third, it neither decreases financial liability nor it increases asset. So pension is a revenue expenditure. Next, if we talk about the repayment of loan, when the government is repaying its loan, actually it decreases the financial liabilities, and that's why it is a capital expenditure. Government is actually investing in some private sector company. Now government is buying the shares of that company. It increases the asset, and that's why it is a capital expenditure. Building of railways, it is a capital expenditure. Okay, so these are termed as revenue and capital expenditure. Clear? Done? Everyone? Okay, so there is an income which is divided into two categories, and there are expenditure which is divided into two categories. Okay, now I hope that you have understood this. Now, if we talk about the complete thing in the union budget, so union budget has different type of revenues as well. There is a capital revenue, there is a primary deficit. Oh, sorry, there are different type of deficit in the budget. Like there is a revenue deficit, there is a capital deficit, there is a primary deficit. So what is the concept of these deficit? Again, this will be continued in the paid batch. Okay, so this is actually a simple overview of this chapter. Okay, in which I have explained a very short portion of the chapter. Rest is still left because there are various things which are to be learned in the union budget, and this is actually covered in detail in the paid batches. And if you want to purchase any of the paid batches, Oliveboard is offering you a 50% discount currently on the occasion of Independence Day. So kindly, if you want to have the paid batch, you can register yourself in the Oliveboard app. There are batches which is present in Hindi medium as well as in English medium, both. Okay, so if you are taking the super elite subscription of the Oliveboard app of the JAIIB category, you need not to purchase every batch separately because all the batches are covered in the super elite subscription. So you can check it out in the Oliveboard app. Just go download this app and register yourself in the category. Thank you so much for joining this session. If you like this session, please like and share the video to the maximum you can. And if you haven't subscribed this channel yet, guys, please subscribe the channel and press the bell notification icon. Thank you so much. Till then, take care, everyone. Bye bye, guys. Take care. Thank you. Bye, everyone.